Hello, Oracles. Well, Tesla had their earnings last week, and while they did miss expectations, the market still cheered the outlook for Tesla going forward. Now, I do think that Tesla is going to be facing some challenges in the near term, but I think that near term pain is going to give us some long term opportunity gains. Now, of course, anybody who's holding on to this long term or who's bought in before 2020 is doing perfectly fine right now. Heck, basically anybody right now who had purchased anytime is going to be on the upside unless you purchased right at the very peak at that $414 level when we hit all-time highs back in 2021. Otherwise, you're most likely green on your position right now. Now, we did see that near-term pain back in 2022. That there turned out to be a great buying opportunity, which I thought would be. And many of you guys did a very good job on purchasing on that downtrend in 2022 and lowered your cost basis. Now we're at a position where I think we could see something potential happening this similar again. I don't know if it'll be as long as and drawn out. It might be, and I don't know if it'll be as extreme as it was before. But the thing that we're looking at near term right now is the fact that, yes, Tesla has all these great things on the horizon, but the revenue and the bottom line numbers coming in are going to take some time to actually come to fruition on all of this because we have Model Q coming out, we've got Optimus, we've got FSD. All of these things are awesome. That's why the market cheered during the earnings call on Wednesday last week. The problem we're going to be running into is Optimus isn't going to be giving us any revenue for at least a few years. It may help the bottom line when it comes to operational costs because they could be removing some labor from their factories, but realistically on the top line, there's no revenue going to be coming in. FSD being solved, they don't have a lot of revenue coming in from it right now. Even if they do solve it, maybe that upticks the revenue a little bit, but there really isn't any concrete idea as to what's going to be going on the robo-taxis. We are going to be having robo-taxis going to be unsupervised in Austin come June. That there's going to be laying the groundwork, but that is strictly from Tesla's fleet alone. So that doesn't mean that Tesla owners are going to be able to do this. So realistically, by the end of the year, it is still going to be most likely Tesla only fleet that is going to be operating unsupervised. So people with FSD still will not have the opportunity to go out there and earn revenue for themselves. And because of that, it's not going to bring up the revenue for FSD to begin with. It's going to take some time. Once Tesla proves all of this unsupervised, then I think it's going to come up, but we won't be getting that extra revenue coming in. Plus, on top of that, once they do end up solving it, anybody who has hardware 3, Tesla's going to have to take a big hit on all of that because they're going to have to figure out how to solve that and how to get all those vehicles upgraded. A lot of people were suggesting out there just, hey, let those people have, FSD attached to them versus attached to the car, or maybe just have a one-time transfer to a new vehicle. That would save Tesla a lot of the trouble of bringing in the older vehicles and upgrading all that hardware. They already have new vehicles with all the hardware in it. Say, hey, maybe you just take a new vehicle and say, hey, we'll let you trade in your old vehicle. We'll even give you a 10, 15, 20% discount on that vehicle, whatever it is. We're going to upgrade your vehicle. We're going to give you FSD for free in that vehicle. And it may be easier to do that way and get the newer vehicles on the road rather than having the old vehicles having to get updated. So that's just my thought on that. We'll see how Tesla ends up playing it out, but that still is going to be a significant hit to the bottom line as they make that transition. And then when it comes to the Model Q, yes, we're going to be having that vehicle coming out, but if we lose the EV tax credit, that's going to be negating a lot of the gains that we would be getting from that Model Q, and that Model Q coming out is going to take some time to ramp. Even if it does go on a fast ramp and we end up getting to volume production by the end of this year, you're still going to be looking at potential economy issues with the inflation going up. Who knows how that's going to be affected there when it comes to vehicle prices and prices across the board? Because even if the vehicle comes in at a $37,000 price tag without the EV tax credit, if prices of everything else in people's lives are going up, they're not going to be able to afford the Model Q even. So that could cause some issues as well in the near term. So I think there's a lot of excitement and a lot of positive things moving for Tesla in the near term over the next 12 to 18 months. But I think the numbers in their earnings aren't going to actually reflect this until 2026, probably second half. Now, looking at all of that, that's kind of where Elon had said 2025 is going to be the foundational building year. We've got the foundation built. We're now building that structure on the company. And then after that, we are going to be looking at a great, awesome 2026 and then a ridiculous 2027 and 2028. So again, I think that plays out perfectly with the timing of all of this when it comes to what's going on with the company's fundamentals, what's going to be going on with the earnings reports over the next year and a half, is they are going to be facing some challenges. But if we can look through all of that through the fundamentals, sort of like people did last week on the earnings, and say, hey, we are moving in the right direction, we are starting to hit these timelines along the way. If we can actually achieve all of those, then when everything clears and the dust settles, we can actually get ourselves an earnings report that is going to be ramping back up, similar to what we saw back in 2020 and 2021. So I think that could end up playing out. And again, that could be the next 12 to 18 months. And nobody knows what's going to happen with the actual stock price, because stock price for Tesla, we know, does not always follow the fundamentals. So following all of that, the next 12 to 18 months for the stock price could be uncertain. I personally think that we are going to be pulling down. And these will be partially from the macro environment due to tariffs and the unemployment and a lot of other things going on, bringing the entire market down. And I think Tesla in particular is going to be struggling just from all the things that I had pointed out, and having revenues not be as strong. It could be a similar year to 2022 where we see small upticks in some things, but there's going to be a lot of different costs associated with that. So the bottom line might not be as strong. And it's definitely not going to be that 30% year over year growth or those massive growth numbers that we had been seeing in years past. I think it's going to be minimal growth on the bottom line, could be flat, maybe a slight uptick when it comes to deliveries. And that there, I think, is going to be the challenge that Tesla faces again in 2025. Again, moving forward into 2026, I think that takes a step change up. We start to see those ramps again coming up when it comes to vehicle deliveries. Optimus then coming out and potentially getting into other companies' factories maybe by the end of 2026. And then, of course, FSD being solved. If we can actually get robo-taxis on the road when it comes to end users versus just Tesla's fleet, and then looking forward to the Cybercab coming in 2027, massive numbers coming up from there. But with that said, all the pain that we could be feeling in the next year, year and a half, just put it in the back of your head. I could be wrong on this. Maybe we end up going forward. Maybe Elon's relationship with Trump kind of helps him out there, but it doesn't seem like Trump is doing anything to favor Elon and Tesla. Trump is doing what is right for the country, and Elon is supporting a lot of that. Elon has said that they don't need the EV tax credits. So if they lose the EV tax credits, it's going to be a hit on Tesla's bottom line, but long term, it's still going to be fine because Tesla does not need all of those. It's actually going to be hurting all of their competition, and the Tesla will be the only one standing with no competition out there at all. Because a lot of these legacy automotive makers, where we have Toyota and Ford coming out with earnings this week, those two companies are going to be struggling. If they don't have EVs coming out, they're going to be having some challenges. Ford kind of was starting to do that with the F-150 Lightning, but we really haven't heard much from all of that. And we'll hear more about that on their earnings this week. But still, Tesla clearly taking the game on all of these, and Ford still wasn't making any profits on their vehicles. So if they lose the EV tax credits, that's going to hurt them even more. We see companies like GM switching more of a focus back to ICE again. We have Honda and Nissan merging together to try and just survive. We've got Volkswagen partnering up with Rivian so that they can survive. All of these partnerships and mergers are happening, something that I had called back in 2021 that we would be seeing by 2024 and 2025. This is now all coming to fruition, and I think we're going to continue seeing that. And if we lose the EV tax credits, then these legacy automotive makers are going to be struggling even more to make that transition, and they're going to have to fight it and figure out how they can do it. Some are switching over to the hybrids to kind of make that transition, but we've been doing hybrids for decades now. It's not even a more efficient vehicle itself. It is just kind of that mental transition for a lot of consumers out there who don't trust EVs, and they can say, hey, I can go with an EV, but when I don't feel comfortable with it, I can flip it over to gas and I feel more comfortable that way. So that might actually end up helping people transition over to EVs when it comes to Tesla. But those companies who are doing the hybrids, it's going to kind of be like a VCR. VCRs were cool. That's how you watched your movies at home for a sweet decade and a half. And then DVDs and Blu-rays came out and nobody uses VCRs anymore. We could end up seeing hybrids being very similar to that, where hybrids are going to come out to help people transition over to the better technology. And then once that better technology is there, the hybrids are going to go away entirely. So I think that's going to be the transition we end up making over the next decade or so. And we just have to see how it's going to end up playing out. And I think because of losing the EV tax credit, it's going to force a lot of legacy automotive makers into that position, and the Tesla will come out on top because they're going to be the only player here in the US who's actually producing anything of significance when it comes to the EVs. And then, of course, we've got energy as well. Energy is going to kind of be that sleeper that just keeps on creeping up and actually starts hitting those numbers on the bottom line. And of course, with Tesla Energy, and you've got the charging stations that are out there as well, that piece right there is going to kind of give that cushion on the bottom line. So even if EVs falter a little bit, you'll still see that cushion on the bottom line when it comes to energy. So I think we're going to see again the next 12 to 18 months, still some uncertainty, and I'm going to be tracking along and I'll pay attention to the earnings and see what's going on with the numbers there. But to me, Tesla's more important things are how close are you to solving FSD? What's the progress on the Model Q? And what's the progress on Optimus? Those three things right there. And of course, a year ago, I never thought I would be talking about Optimus in this significant role as soon as I am. But hey, let's see if it actually comes to fruition. Tesla wants to put out 10,000 units this year. Even Elon said that they will most likely fall short of that number, but that is their goal. And they're going to be using those all in their factories. Let's see how they use them in their factories, because that use case will help us determine how they're going to be utilized in other companies as well when they start selling them to other manufacturers. So again, I think the next year, year and a half, we see the stock pull down. I think the entire market's going to pull down. I do think we're going to end up seeing, that $218 gap get filled. Maybe we dip below 200 and fall down to that 147. Wild to think about, but that is a potential scenario on my radar right now. And of course, if that happens to me, that's an awesome buying opportunity. I think the stock price at that point is not going to be reflecting what the future holds. I think right now, the stock price is reflecting what the future holds for Tesla. I do think it has a few years of future based into the stock price right now, pushing over that $400 mark. However, I do think that is the reality for the intrinsic value of the company come 2027. So if we do end up seeing the stock price pull down to 218, 147 or lower, or whatever price we pull down to, I think that we are going to be looking at a great buying opportunity, because I do think that the realistic intrinsic value of the company is around that $400 mark in late 2026 to early 2027. Now, that's not my price target on all of that. That's just kind of where I'm rough ballparking those numbers. I will still get out for you guys once I get a chance my actual price targets for the next 10 years. But I think that that's what we're going to be looking at in 2026 to 2027 is that $400 mark. So I think that's why right now we would basically be trading flat for the next year, year and a half. But if we end up seeing the stock price pull down, that is going to tell us, all right, well, now we can start looking at that upside. Let's say January 1st, 2027, the stock price intrinsically should be $400. If we pull down anything lower, you could just do the percentages on that. So let's say we pull down to $200. You can say, all right, well, there's a 100% upside from there going into 2027. Now, again, none of that's financial advice. None of that has any actual backing behind it when it comes to my specific numbers in my valuation model. That's just me ballparking it based upon what other people have put out there for their valuations and just saying, hey, that is the potential. That's where we could possibly be. So whatever happens between now and then, just know that it'll most likely be a buying opportunity if we end up pulling down. So I think that near-term pain could lead to some amazing long-term gains in the stock price. You guys can let me know your thoughts in the comments below on all of that. What do you think the next 12 to 18 months are going to look like for Tesla when it comes to the company, the fundamentals, the projects that they're working on, and the stock price itself? Thank you guys so much for watching. I appreciate all of your support. Have a great one.